Welcome to PyUncut, where we break down the biggest stories in tech and finance in a way that actually makes sense. Today's question is simple but powerful. Amazon stock. Is this the time to bail out or the perfect moment to buy? Because right now, something very interesting is happening. Amazon, one of the most dominant companies in the world, is going through a phase where its stock is under pressure, even though its business is still growing. And that's exactly what makes this situation confusing for investors. So let's break it down step by step. First, the reality check. Amazon stock has been struggling in 2026. It's down roughly 10 to 12% this year and has seen sharp drops after earnings announcements. In fact, at one point, the stock even hit valuation levels not seen since the 2008 financial crisis. That's surprising for a company that dominates e-commerce, cloud computing, and now artificial intelligence. So what's going wrong? The biggest reason is something that sounds positive at first, but is actually scaring investors. Amazon is spending massively on AI. The company has announced plans to invest around $200 billion in 2026 alone, mainly on data centers, chips, and infrastructure. That's not a small investment. That's one of the biggest spending plans in tech history. And this is where the problem begins. Because while this investment is meant to build the future, it is hurting the present. Investors are worried that all the spending will reduce profits, lower free cash flow, and delay returns. In simple terms, Amazon is spending today for a payoff that may come years later. And the market does not like waiting. This has already triggered a massive reaction. The stock dropped nearly 10% in a single day after earnings, mainly because of this aggressive AI spending plan. At the same time, Amazon is even raising money through bonds, potentially up to $42 billion to support these investments. That tells you how serious this expansion is. Now let's talk about the second issue, Amazon Web Services, or AWS. AWS is the most important part of Amazon's business. It is highly profitable and drives a big portion of the company's earnings. But here's the problem. AWS growth is still strong, but it's not as explosive as before. And in some cases, it has lagged behind competitors like Microsoft Azure and Google Cloud. Even worse, demand for cloud services is so high that Amazon cannot fully meet it. Yes, you heard that right. Demand is outpacing capacity. That means Amazon is missing out on potential revenue simply because it doesn't have enough infrastructure ready. And this creates a strange situation. Amazon is spending billions to build capacity. But until that capacity is ready, growth remains limited. So again, we see the same pattern. Strong long-term story, but short-term pressure. Now let's zoom out. Because this is not just about Amazon. This is about a bigger shift happening in the tech industry. We are entering what some analysts are calling the AI investment phase. Companies are spending massive amounts of money to build AI infrastructure, but the returns are still unclear, and that creates uncertainty. Amazon is right at the center of this transition. Some investors are worried that this could turn into an AI spending bubble, where companies invest too much before seeing real profits. Others believe this is similar to what happened in the early days of cloud computing. Back then, AWS itself was seen as an expensive experiment. Today, it is one of the most profitable businesses in the world. So history tells us something important. Amazon has made big bets before, and those bets have paid off. Now let's look at the bullish case. Why some analysts believe this is actually a buying opportunity. First, Amazon is not broken. Its core businesses are still strong. E-commerce is growing. Advertising is expanding at over 20% rates. And AWS is still the leader in global cloud infrastructure with around 30% market share. Second, AI demand is real. Amazon's CEO has even projected that AI could drive AWS revenue to as high as $600 billion by 2036. That is a massive long-term opportunity. Third, valuation. Some analysts believe the stock is now undervalued. In fact, one estimate suggests Amazon could see up to 46% upside if sentiment improves. That's why some investors are calling this a mispriced, not broken situation. But now let's look at the bearish side. Because this is not a one-sided story. The risks are real. First, AI spending could stay high for longer than expected. If returns are delayed, the stock could remain under pressure. Second, competition is increasing. Microsoft, Google, and other players are aggressively investing in AI and cloud, and in some cases, they are moving faster. Third, macro factors, global tensions, supply chain disruptions, and even physical risks like data center outages are now impacting operations. So what does all of this mean for you? Here is the simple takeaway. Amazon today is a classic case of short-term pain versus long-term potential. If you are a short-term investor, this environment is risky. Volatility could continue, and the stock may not move up quickly. But if you are a long-term investor, the story looks very different. You are looking at a company that is investing heavily in the next wave of technology. A company that has successfully reinvented itself multiple times, from e-commerce to cloud, and now to AI. So the real question is not just whether Amazon stock is falling, the real question is this. Do you believe in Amazon's ability to execute its long-term vision? Because if the answer is yes, this could be one of those moments that looks obvious in hindsight. If the answer is no, then the risks may outweigh the rewards. That's the decision every investor has to make. And that's what makes this story so important, because it's not just about Amazon. It's about how the entire tech industry is evolving, and how markets react when the future arrives faster than expected. That's it for today's episode. If you found this breakdown helpful, follow PyUncut for more deep dives into the biggest stories shaping technology, business, and the global markets. Until next time, stay informed and stay curious.